which is under management accounting. Yeah, under management accounting, the cash budget is part of budgets, part of the budgets. And I will read the one for cash budget. And it says the following information relates to the projected activities of Detrix Limited, a local manufacturing company, for the year 2024. So I've been given the wages, material purchase. Yeah, this one should be material purchased, then the overhead cost, and then you have the sales, and they're in thousands of shillings. Additional information, number one, it is expected that the cash balance on 30th April 2024 will be 66 million. Wages are paid within the month they are incurred. Creditors for raw material are paid 3 months after receipt. Debtors are expected to pay 2 months after delivery. Included in the overhead figure is 6 million per month, which represents depreciation. There is 1 month delay in paying the overhead expenses. 20% of monthly sales are on cash basis. And number 8, a commission of 5% is paid to the agents on all sales on credit, but this is not paid until the month following the sale to which it relates. This expense is not included in the overhead figure. Then the company intends to repay a loan of 75 million on that 1st May 2014. Number 10, a delivery is expected in the month of June 2014 of a new machine costing 135 million, of which 45 million will be paid in each of the following months. It will be paid in each of the following months. Then the company has an overdraft facility. The company has an overdraft facility with the banks. So you are required the cash budget for the month of May, June, and July. So month May, June, and July. Yeah, that's where we need to prepare our cash budget. We'll prepare it here, just this place. So this is Detrix. So Detrix Limited. Detrix Limited cash budget. Cash budget for 3 months. So for the quarter, yeah, I can say, yeah, for 3 months, for 3 months. For 3 months ending July 2024. Yeah, for 3 months ending July 2024. So in our case, we just need 3 months. So you can have May, June, and July. And we shall have our details on this end. Details. Yeah, for 3 months, and we are dealing with shillings in thousand. Shillings in thousand. We shall start with the receipts. The receipts is the amount that we are receiving, the cash or the inflows that we are having. Okay, so you can decide to have some workings on these. Yeah, so we shall see where we need workings. We shall do the workings or just deal with it directly. So our receipts is the amount that we are getting either from the sale, whenever we are selling, yeah, from sales mainly, whether we are taking the loans, whether we are receiving the dividends. Yeah, sales are both in cash and on credit. That is part of the receipts. And the dividends, if we are having any income or we are having any loan that we are taking, that one is taken to be part of the receipts. So there are two ways of accounting for the balance. Yeah, this one. It is expected that the cash balance on 30th April 2024 will be 66. So there are those ones that we start with it here at the beginning of the year, the balance brought down, or we use it at the end. Yeah, which I prefer using it at the end, so it will not prevent you getting the other months. So you can use the opening balance and the closing balance at the end of our cash book so that you can have the opening. We have the balance for the period, then the opening balance and the closing balance. The closing balance. So we are told in note number 4, where we are having debtors are expected to pay 2 months after the delivery. Debtors are expected to pay 2 months after the delivery, and we are having note number 7. 20% of monthly sales are on cash basis. 20% are on cash basis. So you can use this place, this place, so that I have my cash sales, cash sales to make it easier, and then I have the debtors, credit sales. That one will make the difference. So this one is 20. That is 20%. So the balance is the creditor. If 20% of monthly sales are on cash, then the balance will be on credit. And we know our sales, we have been given this statement, the column for sales. So this one, I will take this and I'll just multiply by 20, which I will lock. 20% is constant. So that means our cash sales will be constant. So that is our cash sales for each and every month, and the balance is what is on credit. So cash sales, 20% of total sales that we are having, and the credit sales will be the balance. You check the cash sale, the total sales, and you minus the credit sales. You take the total sales minus the cash sales, so that you can get the balance, which is the credit sales, and they are telling us that note number 4. Remember, credit sales is what we are referring to as the debtors. So for clarity, you can just work them separately, or you can combine them. You can either decide to work them separately or you combine them. So for the cash sales, remember we are receiving it directly during the month. 20% of monthly sales are on cash. So for the month of May here, our cash sales was 42. The other one 36, and for May, June, and July is 30. That way. So May cash sales is 42, June is 36, and July is 30. Then the credit, which is the debtors, note 4, debtors are expected to pay 2 months after delivery. 2 months after delivery. So when already we have sold on credit, they will pay us 2 months after delivery. Meaning, when we are looking at the month of May, if we are to be paid in the month of May, that means that is the sales that we made in March. The sales that we made in March. So they will take 2 months. That is a March. They will not pay us in March. They will not pay us in April. So they will pay us in May. That is 2 months after the delivery. 2 months after the delivery. 2 months after the delivery. So the one for March, we receive it in May. So the one for March, this one. So March 144. June we receive 120. And July we receive 168. 2 months after the delivery. 2 months after the delivery. That is when we are receiving the debtors, which we are referring to our credit sales, because debtors arise from the credit sales. And we did not have any other income. There were no loans. Loans we are paying. We are repaying the loan. Even the other is motor vehicle that we are repaying. So we did not have any other income. So this one is total receipts. In the event of other income, we should have added them. Just need to get the total receipts that we received during the month. That way, just use top and bottom border. That way. So that is our total receipts. Then the payment, the payments that we are having. Payments that we are having. So for the payment now, we are paying all these other items, the wages, the material, the overhead. We are making a payment for them. And starting with note number 2, they are telling us wages are paid within the month they are incurred. So wages are paid within the same month. Wages. So that means wages for May, we had 36. Wages for June, we had 30. And wages for these other months, we had for June, for July, which was 27, which was 27. Then after wages, number 3, creditors for raw material are paid 3 months after receipt. They are creditors for raw material, that is material purchased. Here, the material that we purchased, so we are purchasing them on credit, and that's why we are told in note number 3, they are creditors for raw material paid 3 months after receipt, 3 months. So if we are in May, 3 months will start from February. So February, we purchased in February, so we shall take February, March, and April, 3 months after, so we shall pay in May. 3 months after, we pay in May. That is when we shall make the payment, 3 months after receipt. So here, so we are saying May, we are taking February, material, 90. Then the next one,
Excuse me, Mwalimu.
yes.
How do we count 3 months? Is it at the beginning of the month or at the end? For example, this one you said in May. When is the start of the period? Is it 1st or 31st? Because if it is 1st, it's supposed to be 31st April.
Okay, so in this case, we are looking at the end because they are not saying that. So they are saying, let me read that. Creditors for raw material, yes.
The assumption is here.
Yes.
Either you take it at the start of the period or at the end of the period, the month. Still, it will give you the same answer. Let us imagine, for example, we bought the goods on credit on 1st February.
Yes.
So if you add 3 months, it will go to 1st of May. And for example, we say we bought those goods on 31st, on let's say the end of the month, which is 28th February, plus 3 months, it will end up to probably 31st May. So the concept of either it starts or it ends, any can it do.
Yeah, so it doesn't matter whether we bought it at the beginning or in the course because the period is 3 months. Yeah, whether we are buying at the end or at the beginning. So there is that one that we shall, they normally say we are paying within the same month. Or assuming they talk about, there is another concept that they can use, the wording. Assuming they are saying that creditors for raw material is paid within 2 months or averages 2 months. When they use the word averages 2 months or within 2 months, that one is not the same as after. 2 months is just the April and May, because now we shall either pay at the end or within the second month. That's why we normally say the average of 2 months. But the moment they are saying after 3 months, it means we shall count the whole of February, regardless of when we bought it, the March and the April. So the dates when we bought it, that one doesn't matter because they are not saying whether we bought it at the end or at the beginning. And as the one had said it, yeah. So whether it's at the beginning or at the end, that one will not matter. You will count still the whole 3 months when you are counting. Okay, so thank you for that clarification. So that's why we are counting. When we are paying in May, we bought it in February, so that we count the whole of February, March, and April, so that after these 3 months, we make a payment in May. And for June, we take it in March, the one that we bought in March, and the other one, the one that we bought in April. 105. Then the next one, after we have done that, that is for the creditors. We are done with wages, we are done with creditors, we are done with debtors. We are having now in note number 5, where we are told included in overhead figure is 6 million per month, which represents depreciation. So we know depreciation is not a cash, it's an non-cash item. Therefore, we are not paying for depreciation. This one we shall eliminate it. And number 6, they are saying there is a 1 month delay in paying of overhead expense, 1 month delay in paying of overhead cost or overhead expense, so that the overhead, if it is 1 month delay, the overhead for April is the one that we shall pay in May. 1 month delay, so we are not paying exactly during the month, so we are delaying in 1 month, we pay the following month. So the overhead for April was 42, but we shall eliminate the 6,000. Remember, the 6,000 is the one for the depreciation, and depreciation in this case is representing a non-cash element. So that one we are eliminating it. Yeah, and you can put it either you can lock it or just put 1 1, and the one for June we eliminate the 6,000. Yeah, that way. So we are starting with April. 42 minus 6, you get 36. 54, you get 48. 48, you get 42. That is for the overhead cost. Then number 6, I think you're done with that. Number 7, 20%, that one you have dealt with it for the cash sales, cash basis. And number 8, a commission of 5% is paid to agents on all the sales on credit, but this is not paid until the month following the sales to which it relates. This expense is not included in the overhead figure. So we have a commission, yeah, sales commission, because it is based on sales commission. So sales commission, and for the sales commission, it is 5% of the sales on credit, and we are told it is not paid until the month following the sale. So that means the one that we are paying for May, it will be the one for April. Yeah, it will be the one for April, and we are paying at 5%. So our sales on credit sales for April, which was 120. So we shall multiply by 5%. Shall multiply that by 5%. The commission, the one for May, we pay it in June, 5% of it, and the one for June, we pay it in July. The one for June, pay it in July, 5%. Yeah, that is our sales commission. Yeah, we are paying, we have 1 month delay, when we are making that particular payment for sales commission. And number 9, the company intends to repay loan of 75,000 on that 1st May 2014. So we have loan repayment. Yeah, loan repayment. So we intend to make a repayment of 75 million in that particular month. Yeah, that month. Yeah, that way. Then the last one, in note number 10, a delivery is expected in the month of June 2024 of a new machine costing 135,000, of which 45,000 will be paid in each of the following months. So we are expecting a delivery in June 2024. Yeah, and we are having 135 as a cost, but we are making 45,000 will be paid in each of the following months. So we are having delivery, so machine. So here, machine. This is a capital expenditure that we are purchasing, and we are paying it 45,000. So we are expecting it on June, but payment of 45 will be made in each of the following months. So following months is the month following the month of June. We are not paying immediately because we are talking about in each of the following months. So following months is July, August, and so on. Yeah, July, so we shall pay it in July, August, and September. So for this cash budget, we shall only account for the month of July, when we shall incur that payment of 45. And we get the total payment. I believe we have captured all of them. So total payment there. I'll drag this. Now that is our total payment, and we get the balance. balance for the month. For the month.
Maybe Molly.
Yes.
On point 10.
Yes.
The machine was delivered on June. And it is costing 135, of which out of that amount, 45,000 will be paid in each of the following months. Can you make assumption that when it was delivered, you paid some amount, then the balance, which is 45,000, it was spread in each of the 2 months, because of which it is part of that. So it means this amount probably it was paid on that unit when it was delivered. Then the remaining balance, it was spread equally.
Okay.
The following months.
Balance. Okay. So when you look at a new machine costing 135, of which 45 will be paid in each of the following months. So the assumption is when you look at 45,000 and it is paid in each of the following months, 45,000 assuming they are paying within 3 months, because when you take 135 divide by 45, you'll get each month we shall be paying 45. So they have not told us that there is any amount that was paid, but now the assumption will be what they are saying. We are assuming it was delivered, of which it was delivered on credit. The first payment will be paid after they have delivered. Yeah, after they have delivered. That is the assumption now, not before. We have not paid anything. They have not said whether we have paid so that we have the balance. They could indicate that we had a balance of 45, which now will be spread forward. But in this case, 45 will be paid in each. So they have not said now we are dividing again. It is 45,000 will be paid in each of the following months. So each month will be paying 45, 45, 45 for a period of 3 months. That is my understanding of that. Not that we had paid anything concerning that machine. Okay, so the balance now, we take the total receipts and we minus the total payments. So total receipts and total payments. Here we shall have this, and we minus the 243, and this one I'll spread it that way. Then you have the balance. So balance brought forward, and the balance carried forward. Balance carried forward. The balance brought forward. So in this case, note 1, we had a balance of 66,000 as our balance that we had. So we add the two, to get a balance of 9,000 that way. So this one I'll just drag this across, and here you'll have this 9,000. The carried forward of May will be the opening for June, and I will drag this that way, so that in May the closing or the balance carried forward is 9, June 36, and in July we shall have an overdraft. That's why they're saying the company has an overdraft facility with the bank. If they have an overdraft facility with the bank, that's why now we are having even the negative balances being carried forward. And that's all for the cash budget. The cash budget. So the cash budget, the key thing to note is the wording. Especially when the payment is due and when the receipts are due. Whether we are paying in the same month or we are paying after how many months due, all those things. And again, to identify the payments and the receipts. That is the only trick that is there when you're dealing with the cash budget. And it's something that is doable because